Hello and welcome everyone to Gold Asset of the Day for the 18th of June, presented by myself, Phil Carr, at the Gold and Silver Club. So first of all, what do you need to know for the week ahead? So last week we discussed gold, where we were looking at a range of approximately 1,320 US dollars up to that 1,350 US dollar level. And in fact, we found support exactly at that 1,320 US dollar level. And again, just going back to the point last week, you really want to be aware of what the hedge funds and money managers are doing in this market at the moment. So yet again, over the latest week, we have seen an increase in hedge funds and money managers on their long positions with gold. However, we have seen the opposite with retail traders. So over 70% of retail traders are now selling this rally on gold. And that was evidenced last week with the big breakout that we had to the upside, finally breaking above the 14-month highs. Gold breaking out to 1,358 US dollars per ounce, essentially liquidating a lot of the retail traders' sell short positions as hedge funds and money managers continue to accumulate gold on the net long side. So over the course of this week, so far, we have seen support come in, certainly for gold at the lower end of the range, again, around that 1,300, about 30 US dollar per ounce zone. So over the course of this week, we are looking again for a range of approximately 1330 up to that 1350 handle, slightly above that, in fact, near the 14-month highs. So we're looking again for about a 250 to 300 point range this week for gold. But just bear in mind, again, a lot of retail traders, they're trying to catch the top here on gold, whereas hedge funds and money managers, they're continuing to build their net long positions. So just from a research driven point of view, you want to be aware of that data, and also the fact that we have Wednesday, the FOMC statement. That will be on Wednesday the 19th, which will be tomorrow, Wednesday the 19th of June at 7 o'clock London time. We're going to have the FOMC statement. And of course, we'll have much better idea with regard to future monetary policy and the potential for the Fed to cut interest rates over the course of this year. So we really want to watch the narratives coming out of the statement, the overall rhetoric from the Federal Reserve, and what impact that does have on the US dollar and gold prices as well. That will be a major catalyst this week for the US dollar and precious metals. Now, it's not only gold that you want to have a look at this week. I would also suggest having a look at platinum. We actually covered that in our week ahead report in detail at the Gold and Silver Club, where we were looking at buy opportunities on platinum sub $800. In fact, we entered into a position just yesterday at $792 and already banked 70 points profit on that trade. And now we're protecting the stop as we're looking for potentially more upside on that position as we continue to progress towards the end of June and into July as well. That said, you really want to keep your eyes on also the European Central Bank announcements over the course of this week. We do have more speeches from Mario Draghi. You're seeing volatility certainly on the US dollar, the euro breaking down significantly today. The US dollar also tapping near that 2-year high level as well. So I would definitely look out for the potential of more strength on the US dollar. But right now, that's not really having a negative impact on gold prices. So just keep an eye on what the overall smart money is doing in this market. They continue to build their overall net long positions. In fact, we did see a switch as well over the course of the last week with silver, where hedge funds are no longer continuing to reduce their net longs. They're now starting to get on the buy side for silver, and certainly silver on higher timeframes is looking interesting whilst it's below $15 per ounce. So with that, let's just give you a quick summary of what we're looking at over the course of this week and what you need to be aware of. So number one, hedge funds and money managers, again, they've increased their net long positions on gold. Number two, retail traders, over 70% are selling short gold at the moment. And for the most part, retail traders have tended to be incorrect with the recent rally that we've seen here on gold. A lot of retail traders have been selling the rally, whereas hedge funds and money managers, they've been buying and they've been on the right side of the trade. And thirdly, we have Wednesday, the FOMC statement, which is likely to be a big catalyst for the next major move here on the metals. So with that, that's been Gold Asset of the Day, and I wish you good trading.